Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. Today, the stock market took a little bit of a tumble, and perhaps little is not the best word because it was the worst day we have seen in the last 3 months, which means that yes, the market was down. Yes, it wasn't necessarily the best day to go in and check your account. However, to the keen eye, to the smart, savvy investor that watches videos like these and subscribes to videos like these and listens to podcasts like these, this was an opportunity for you because just like Warren Buffett says, be greedy when others are fearful and fearful when others were greedy or are greedy. And people were fearful today, and the market was a little skittish because of yesterday's interest rate announcement, fearful that the Fed could push us into a recession. That's a legitimate fear, and that's all well and fine. However, it's days like this where you get a gift to buy quality companies for a discount. So today I'm going to give you 4 companies that I like, that I think were definitely on sale today, and to show you why this matters on a day like this. And then maybe tomorrow, I don't know if the market's going to be up or down. We'll see. Perhaps you can do some more research tonight, decide what you might want to get on sale tomorrow. So it can kind of help you to narrow down your list, especially now we're kind of getting to the end of the year. This is where I start to do my moving day and start to make some tweaks and changes to my portfolio and hold all the way through until 2023 and reevaluate in June. Now, here's what I mean by discount. What I am looking for, or when I say buying something at discount, buying something on sale for the stock market, I mean something that was good, that was quality, that I was probably going to buy anyway, but it was a little bit cheaper. For example, Eli Lilly. I've talked about it for at least the last 6 months. It's not on this list because it wasn't on sale as much as some of these others. But Eli Lilly has been a great company for the most part this year. Today it was down like 0.9%. I've been talking about it for a while, right? If I was going to buy Eli Lilly, today it was even better for me because it was just 1% cheaper. Now, the price that you are buying these at or the percentage that it drops can actually make a pretty significant difference. I'm going to give you a simple example here. So for example, let's say that you are going to buy a stock at $100 and you say, hey, I'm going to go buy this stock at $100, and whenever it hits $200, tomorrow, 2 years from now, whenever, I'm going to sell this stock at $200. You buy it at $100, you sell it at $200. That's 100% gain. Super easy from a math perspective. Well, let's say that there is a 5% discount today. Some of these stocks are down 5, 6, 7%. Well, if it goes from $100 down to $95 and you buy it at $95 and you still sell it at $200, that is a 111% gain. So that means that just waiting until it dropped to the right price, in this case is $95, you made it extra 11%. Now imagine if you could do that consistently. Now in real life, it's going to be hard to just keep finding the exact perfect price point, right? And there's no guarantee that's going to go to $200. But again, we're suspending all of that just to give you a simple math case here. But understanding what is the quote unquote right price to buy or waiting for it to fall just a bit, that little 11% difference, imagine if you're doing that year after year after year, right? You're increasing your returns by 11%. And compared to the other person who is also getting a 100% return, which is great, you are obviously going to win because you're getting that 111% compounded over and over and over again. Now, in real life, is it easy to do that every single time? No, but the price does matter, or it really can matter and really make a difference between being pretty good at investing or being really great at investing and really changing your financial picture. Now, aside from all that, I did an entire video inside of our members only where I walk you through very specific examples and show you how all of this math works. So if you want more detailed explanation there, feel free to go and check that out. But for today's focus here are the 4 stocks that I felt were definitely on sale. And again, the last thing I'll say is, as I'm doing this, I say on sale in that these companies were doing incredibly well this year and they just happened to be cheaper just because the market wanted to overreact. But everything was almost down today, right? However, I want something I was probably going to buy anyway. So some of these we've talked about before. I mentioned Eli Lilly. This is not on the list because again, there are companies that are down a bit more today that I think are a better value, right, in terms of what's quote unquote on sale. So we want quality here. I don't want something that's, hey, it was down 80%, it was just down 85 today, or just 5% more. Who cares, right? That was a trash company. So here we go. Here's what's on sale. Here's what I like based on, again, what was quote unquote on sale today. All right, so the first one I have here is McKesson. That is MCK. McKesson is in the medical distribution technology space. They have done incredibly well this year, and they were down 1.10% today. Doesn't sound like that big of a sale. However, the company is up 20% in the last 6 months and 60% over the last year. Look, I would probably buy McKesson at any point of the year anyway, but if I were going to buy it, if it's down 1% off, I might have to go and pick that up. So that's one that you definitely want to add to your watch list if you haven't already. Y'all know how I feel about companies in that medical space, because regardless of what we think is going to happen, usually these medical stocks, Eli Lilly is also included in this category, tend to do well. They are very solid, especially in times of, again, inflation, confusion, higher interest rates, all that kind of stuff. Medical and insurance tends to be a little bit insulated to a degree. So the first one here we have is McKesson. Now, next one is O'Reilly. I own O'Reilly's. Y'all know this. I've talked about it many times before, as well as AutoZone and GPC, General Parts Company. But O'Reilly today was down 0.9%. They're up 35% in the last 6 months and up 20% over the last year. Again, I've had O'Reilly's for years, and I have been adding more. If you have been following me on public, then you know that I bought some more last week, and I bought a decent hefty sum last week. We'll see if I buy some this week. Really depends on where the market is. So O'Reilly is second on this list and has obviously done quite well. I think O'Reilly, and this is obvious because I've talked about these before, but O'Reilly, General Parts, and AutoZone, I think should do quite well in 2023 based on everything that we expect, right? If there's going to be a recession, people are still going to hold on to their cars. If if the Fed is going to continue to raise interest rates, people are still going to hold on to their cars. They're probably not going to go out and buy a whole bunch of new stuff. Also, which we don't want to see unemployment increase. If it does, though, and if the job openings start to shrink just a little bit, people still hold on to their cars and they start to repair them on their own to save money as opposed to going to a mechanic or anything of that nature. So all three of them are good. I think that O'Reilly's was the best in its class, and it was the one that was on the biggest discount today. Okay, now these can always change based on what day you're watching the video and what the market is doing at the time that you're watching or listening. But today, O'Reilly, I think, was definitely on sale. Now, next two have a much greater sale value here. ENPH. It has been there. Okay, it has been there for quite a while. Enphase is a company that we have talked about in the past. They're in the energy technology space. It was down 5.63%, which is significant because remember the example I gave you earlier, going from 100 down to 95, that's 5%. That difference, and again, the math is going to change based on share price and all that kind of stuff, but that little 5% difference can make a huge impact depending on when you decide to sell it compared to somebody who would have bought it yesterday, for example. Now, Enphase is up 78%. I had to double check this one. They're up 78% in the last 6 months and up 58% in the last year. Last I checked, 2022 was still negative on the year. Okay. Something that's up 78% that is in the S&P 500, so you know it, for a base level, it's a decent company at bare minimum. This is one that if you didn't watch our previous video on this, you definitely want to go back and watch that video. Okay, I'm just telling you now, go back and watch our initial video on Enphase. Had you invested back then, you would have made yourself a lot of money. Okay, but again, today Enphase was on sale. Now, I need to check my app. Let me double check real quick because I don't know if I bought shares of Enphase today or not. If I didn't, I'm gonna be upset. But I had, so I have a smaller trading account. People, the members only. We walked through a trade that we did on Enphase, and it's a small account, and I just do a little bit of swing trading here. That's a whole different technique. We can get into that later. So no, I don't have Enphase, but I do have another company that we will discuss here. That was on sale even more. But in either case, Enphase was definitely on sale today, down 5.63%, and it has been an incredible company. I think it will continue to do well. Now, the last one here is Nucor. That is NUE. Nucor has been up 19% in the last 6 months and up 15% over the last year. They are a steel producer, a steel manufacturer. They were down 9.55%. This was the company that I hopped on earlier today because I'm like, oh, this company was good. It is still good, but it dropped by a lot. If you're looking at a candle chart, if you don't know what candle chart is, I did a whole video on that. But basically, it shows you what days the stock was up, what days it was down. And the larger that candle is, the worse the company is if it was down like today. Or, if it's a green day and the larger the green candle is, that's a really great day for that stock. Today, it was a large red candle and the company did fall. Now, part of this, other than the fact the entire stock market was down, was the fact that they did release some lower guidance for 2023. That doesn't really, shake me, because I also know that you're making steel. We are going to distribute the infrastructure bill. That money's going to go out, right? And so what? Right, it was on sale to me. I think the company will continue to do well, or should do well, at least better than the 9% discount, almost 10% discount that I got today. So in either case, I still think it was on sale. So the 4 companies again: Nucor, O'Reilly's, McKesson, and Enphase. So I'm gonna give you a bonus one. Okay, I'm gonna give you actually 2 bonus ones. One could be Netflix, if you are into the streaming space. That's because Netflix has really taken off over the last 6, almost 7 months or so, and the company was down close to 10% today. Now, I'm not the biggest fan of Netflix, just based on a lot of the stuff that we had earlier in the year and the subscriber numbers. The reason why Netflix was down, again, in addition to everything else, was the fact that their advertising business is not bringing in what they expected it to bring in. So just throwing it out there. It's not on my official list, but it might be something, if you're into that space, you might want to take a look at that. And then I'll give you General Mills. General Mills is a very solid company. Their stock symbol is GIS. They were down just 0.4%, so not the biggest discount here. However, it's been up 30% in the last 6 months and then 31% over the last year. This is a company that is going to continue to exist, and also they can adjust their prices for inflation. It's a space that, you have to eat it. Well, you don't have to eat it, but people have to eat. Therefore, General Mills is going to be around. So those are the ones that I would consider. Again, my 4 that I would put my own money on. 2 of them I already have. So I have Nucor now, doing a smaller trade there. I got O'Reilly's. McKesson is extremely good. I've done breakdowns on them. And then Enphase was down today at 5.63%. So those are the 4 stocks that I think were on sale today. We will see if they are going to be on sale tomorrow. Now, last thing I'm going to say, and I always say this to a degree, but you do want to check out the members only tonight. I will be editing the video for the best stocks that I think are great for passive income. We know, based on inflation rates and based on inflation and interest rates and all the stuff that's going on, especially what happened in the last 3 days, market's a little shaky. So anytime it's shaky, I would prefer to get me at least a very solid dividend check, something I can relatively rely on. So I'm going to go ahead and put that video out here in just the next few hours. But if you want it, you got to be the members only. So, make sure that you click the link right there, buildingbread.com/members. All right, that's it for me. Talk to you later.